Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
Welcome, everyone, to another episode of All Things Wildfire. And I just want to remind everyone that, the guests that we bring on here, they're spread out through multiple of disciplines and expertise. And so our goal here is to give you little bits and pieces of these experts so you can put together in your own mind and in your businesses and your practice what are some of the things that you can take home to do, so that way you have a much better understanding of not only what's in your world, but what's happening outside and the things that are going on. And I'm going to introduce Kate Stillwell, who is, to me, Kate, you're kind of like an entrepreneur as far as I see you. I know that you're what I call an engineer geek, okay? That's what I call engineers, geeks. I love them because you guys are badasses, if I can say that on my own podcast. But it's one of those things where I really do respect engineers and the discipline of what it takes to really get through that process and that expertise. But Kate, welcome, and why don't you share with us a little bit about your history so the listeners can kind of get an idea of what your talents are.
Oh, thank you, OP. It's really a pleasure to be on the show, and I appreciate the very kind words. I am very proud to be an engineer geek, and ever since I remember when I was in high school, I wanted to apply my talents to make the world a better place, and a bit of the hero syndrome that's in all of us, and
Right.
Discovered structural engineering and came out to California from Minnesota because this is where earthquakes happen, and earthquakes are the most interesting and the most sort of savior complex way to do structural engineering. So, working with architects to make sure buildings are safe in earthquakes, and that's the original training that I got, and I worked on that for 10 years, and so I know all the gory details of how to make your home or your building more earthquake safe. And from that, served a term as the president of the Structural Engineers Association, so our professional organization. And while I was in that role, I served on public policy committees that think about and look at disaster recovery overall, not just for earthquakes, but for wildfires, floods, sea level rise, et cetera.
Right.
And I realized that safe buildings are a really important piece of disaster recovery, but a big missing piece is making sure there's enough money flowing in. So how do we, as practitioners, not just engineers, try to turn on the tap, so to speak, to get more private market money flowing in disaster, whether it's an earthquake, flood, wildfire? And so that's how I've spent the most recent decade of my life and sort of the more entrepreneurial ventures.
That's awesome. So questions. I got a handful of questions here. When you say, when you talk about the private money coming in and the lack of, how has that impacted? Or when you say not enough private monies come in, what did that mean exactly? What does that mean? Is there just a lack of progress because of that?
Public aid is too little too late, and FEMA is the first to admit this, is that people need another safety net, not just relying on FEMA. The second thing is that some of the most severe natural disasters, earthquakes, floods, are explicitly excluded from regular insurance. And so unless you buy the additional insurance, then you're not going to get a penny outside of whatever public aid you might be able to qualify for. And the third is that most Americans don't have savings. For most Americans, an extra $1,000 expense, this is more than 50%, is a major financial hardship. And this is not just the poorest of the poor. These are our friends and neighbors who, and including myself sometimes, living paycheck to paycheck. And so how do we create a more robust safety net without necessarily recognizing the fact that the public aid is not going to be enough for all of us to recover. And so that led me to explore, private market money after a disaster kind of sounds like insurance, right? So it led me down the path of exploring what are the disaster financing mechanisms that are out there and how do they relate to insurance. And I stumbled upon, when I was practicing as a structural engineer, I stumbled upon this notion of parametric insurance. So parametric insurance means you agree in advance on a lump sum of money, and you agree on the specific data trigger that causes that money to be dispersed. And then when that data trigger, that parameter happens, then the money gets dispersed. Okay, so a pre-agreed lump sum dispersed on a pre-agreed parameter, which is why it's called parametric. And so this notion has been in practice for farmers in Africa if there's a drought that meets a certain threshold, or for a large scale government in Mexico after a very large earthquake. And so I said, well, why can't we have parametric insurance for individuals in the developed world, not just the developing world? So in the next big earthquake, why can't we have something that pays everybody $400, $4,000, $10,000 just to be able to get over the hump, recognizing the fact that that's going to fill the gap until the FEMA money comes in, or until your insurance money comes in if you're lucky enough to have had your insurance. Not enough to rebuild your house, just enough to get a jump start on the recovery process. And so I made that happen. I first parametric insurance for consumers in the developed world, called it Jumpstart for exactly that reason, and available for earthquake risk. And this is not a commercial for Jumpstart, but I want to give like a context of why I do what I do. So Jumpstart is available for earthquakes because I know a lot about earthquakes, and to form this new product, I would be laughed out the door by the Department of Insurance or by Lloyd's of London if I tried to come and say, I want to do this for floods or wildfires. So I did it for earthquakes, and then Jumpstart was bought by a flood insurance company called Neptune, because the same principle can be applied to floods, although we haven't quite released a product for that quite yet. But the idea is that's parametric insurance is one form of how we open the tap and get more private market money flowing in the like private disaster stimulus, right? Get more money flowing so that people can get over the hump, use the money for anything they need, whether they have damage or not, recognizing that everybody needs money for something after the next big disaster.
Boom. I love that. You said a lot right now, Kate, and I've been wanting to get someone on to talk about parametric insurance, and I don't want to necessarily like belabor the point, but I do want to ask a couple of follow-up questions just so the listeners have a better understanding.
Absolutely.
Because I want to have a better understanding too. So with parametric insurance, and I know this, I'm going to use earthquake as an example, and there are probably some parametric insurance available for wildfire, maybe not, I don't know. But with regards to the earthquake, to use that as an example, so it's a pre-agreed amount, and it's a predefined data triggers that will equate to the payout of this predetermined amount. Is that right?
Exactly.
Okay. And so could you give me an example, like for earthquake, would it have to be, does it have to be a certain level of earthquake to reach a certain area or number on how high it is, whether it's a 5.2 or a 9.1? And does it have to be a certain distance away from you or near you to trigger this amount? Can you give me a little bit of feedback on that?
Yeah. So the short answer is yes. And I'll get to the details in a second, but I just want to back up and say the beauty of parametric insurance is that it takes away the arbitration. So it puts the policyholder and the insurance company on a level playing field. There is no big brother looking over your shoulder to determine whether you deserve the money. There's just this data piece, this parameter. And so the important thing is that piece of data has to be indisputable and transparent so that both parties know when it happens and when it doesn't happen. And so most parametric policies use public data as that because it meets those criteria of being transparent and both parties being able to access it. So in the case of Jumpstart's policies, we use data from, and really any earthquake parametric policy uses data from the United States Geological Survey, USGS, which publishes data on every earthquake worldwide and has particularly good data for earthquakes that happen in North America and the United States in particular. So the USGS publishes these shake maps after every earthquake. They're color coded and they show the shaking intensity. And they're roughly correlated with the magnitude and distance. So, right, a large magnitude will have a really dark red center because that's where the shaking was super intense. And then it goes to orange and yellow and green. And the affected area is really quite large, crossing many counties if it's a really big earthquake. Or it might just, for a smaller earthquake, it might just be like a little green area, no red area, just in a relatively small area. So the parametric trigger, the data trigger for Jumpstart is the shaking intensity. And it's based on these published maps. So they're contours and they roughly correspond to magnitude and distance, but it's more fair than just a magnitude and a distance because that would create circles. But it would leave out areas that might be farther out, but might have intense shaking because, let's say, they're on soft soil or they're on liquefiable soil. And so using these USGS contours of the shake map is more fair because it includes those areas that might experience intense shaking. Now, let me give you two examples. 2014, there was a magnitude 6.0 in Napa, California. So that the Jumpstart payout area for that earthquake would have been, so Jumpstart wasn't selling yet at that time, but it would have been all up and down the Napa Valley, but not up into the hills that are outside the valley and not down as far as Oakland and Berkeley, which is where I sit, which makes sense because we were just like woken up by a jolt in the middle of the night and there was no disruption. But the whole Napa Valley, there were closed businesses, there were disrupted utilities, there were closed schools. So life was messed up. Even though the number of deaths, there was only one death from that earthquake. So there wasn't mass destruction, but there was disruption. And so that's the purpose of the money, is to pay for the costs of this disruption. So another example, the Ridgecrest earthquake. So Jumpstart was available at that time. So the shaking intensity, so that was a magnitude 7 point in 2019 on right around the 4th of July. So Ridgecrest is out near Edwards Air Force Base in the Mojave Desert. So the shaking intensity zone for a Jumpstart payout was about 100 miles long and about 30 miles wide, and that corresponds kind of roughly to the shape of the fault. And we did not have the privilege of paying out any customers because we didn't have any customers in that payout zone at the time. Ridgecrest has a population of about 30,000, which is really a very small number of the proportion of the California population. But we do have customers in that region now. So then when the next big earthquake happens in Ridgecrest, we will have the privilege of getting people the money they deserve.
The privilege of giving people the money they deserve. I love that. I love that. So what a fantastic concept. And I'm really encouraged to see what this could look like in the wildfire situation because, there are new carriers coming to the table that maybe by the end of this year or beginning of next for sure will be beginning to take on some of this risk. But I think parametric is probably going to be working its way to wildfire. And so, Kate, let me ask you, in the example you gave earlier about Napa, and you're saying, it was disruption and there wasn't necessarily destruction. If you have parametric insurance, regardless of if you have any destruction or not, but you meet the criteria, the company pays anyway?
Yeah. And so there's both sides take risk, right? So the risk of the insurer is that they're going to have to pay out even if the insured people don't need the money. But the risk on the part of the policyholder is that they might need money in an event that's too small for the that's below the threshold, that doesn't meet the threshold of getting paid out. So that's the trade-off of having this no arbitration insurance, is that both sides have this uncertainty about whether or not the payout is going to happen.
Got it. Love it. Okay. So, Kate, I'd like to now shift gears into, you are a co-founder of a company called FireBreak Risk. And I'll let you describe what FireBreak Risk does, because it seems like you've just kind of began to, from a engineer geek to earthquake to now, like it's disaster after disaster. And I feel like you have an appetite to want to serve people and help them. So can you describe a little bit more about your business there?
Yeah, thank you. So FireBreak Risk is not providing wildfire parametric insurance, but we would love nothing more than to help stimulate the insurance market to be able to provide all sorts of unique and innovative coverages, including parametric wildfire, which, by the way, I will explain FireBreak, but just as a side, I do know that parametric wildfire is available in a few cases, mostly for homeowners associations. And it'll be a little more. It'll take a little more development for the carriers to be ready to offer it to the general public.
Awesome,
So,
thank you, Kate.
yeah, FireBreak is helping inspire a positive feedback loop between home hardening and insurance availability, because we recognize that there's a lot of conscientious residents out there that are doing their part to reduce fire risk for themselves and for their community. Because let's face it, there's a multiplier effect. Every risk reducing action that you take not only makes your home more survivable, but it also helps the community survive as well. Lots of residents like to complain about, oh, the next door neighbor isn't taking care of their foliage, and that's making the rest of us more at risk. Yeah, true, but also it works the other way around. The safer we all make our own homes, the safer it makes the whole community. And so we want to recognize. We also recognize it in terms of making more insurance available. So FireBreak's role is to sit between the residents and the insurers to make sure that the residents are in control of the data that goes to the insurers about their home hardening. So let me back up and say, how does it work? So FireBreak has an app. The Skin of FireBreak is an app that the residents use to walk around their home taking photos and videos. So it's an inspection app, instructions to guide them through what photos and videos to take. We then use a little bit of magic and AI to assign property attributes to the photos, and then those are data fields that get sent to insurance underwriters. So the underwriters are not seeing the photos. They're seeing, okay, are the vents meshed? Is there firewood under your deck? Is there accumulation of dead leaves at the corner of your house in your siding? A lot of these things cannot be seen by the aerial photography and satellite imagery that the insurers are already using. And so it provides additional data for the resident to be able to prove to the insurer that they are a conscientious consumer that reduces their risk.
Okay. So now, and I've seen the app in action, and so, which is really interesting because you have a homeowner going around their property, which I think it's funny because that's what we do at Allied Disaster Defense when we have homeowners that say, hey, I want to be able to improve the quality of our mitigation efforts for wildfire. One of the first things we do is say, okay, Mr. and Mrs. Smith, do me a favor. Let's do a quick FaceTime or send me a video of you walking around the perimeter of your home, because that's going to tell us a lot about if they're going to be able to qualify. In their case, they're trying to qualify for insurance and trying to improve their ability to be insurable. So I really love what you're able to do, because you're putting the control back into the homeowner's hands and saying, look, you have control over being able to mitigate your wildfire risk, along with you and the app coaching them on what they can do. So I remember earlier in our conversation, you'd mentioned that you've helped them focus on the low-hanging fruit of what they can do now with actionable items. And Kate, do you have a list of a few things as examples of what people can typically do to start acting on some of these things?
Yeah, so at the top of the list is going to be moving combustibles out of the ember zone. That's the number one thing, because as some of your prior guests have noted, the way that the fires spread is through ember cast. So these embers fly ahead of the fire. and it causes, and then they collect in corners between the ground and your siding, and then they smolder there. And if they catch something combustible, they can then start a new ignition, and that's how the fires leapfrog, right? So what you're trying to do is prevent the mechanic. This isn't the engineer geek of me. Prevent the physical mechanic of the embers
right.
smoldering and then lighting the house on fire, right? So any place where the embers can collect and start smoldering, you try the combustible. So super low hanging fruit. If you have firewood under your desk, this is always like this. If you have a mulch up against your siding, replace it, rake it away and replace it with either bare soil or gravel or like that. If you have a wooden fence that's abutting your house, think about replacing with a metal fence, or if you can't coat it with a protective coating that buys you time, basically, that increases the amount of time between when the embers catch the fence on fire and when the fire spreads. So that's the number one thing, is getting the combustibles out of the ember zone.
Love it. Now, we've done some of these, not the assessments that you have, but some of our own assessments. And one of the things that we ask the homeowners is, Mr. and Mrs. Jones, would you like us to submit this to your insurance carrier directly? Most of them say yes, because they want the insurance company to know they're doing these actionable items. And some of them say no, because they want their privacy respected, and they don't want this information to go out there because they're afraid that this is going to be shared everywhere, and now it's going to be frowned upon as far as what they do or what they don't do, more specifically. But Kate, similar to car insurance now, right? The carriers are saying, hey, plug in this piece into your car. I'm going to monitor everything you do, how fast you go, how fast how often do you brake, all of that. So we're basically giving the insurance carriers all of this information because we want better value, right? If I'm a great driver, I want the insurance company to know, hey, I want to be rewarded for being a safe driver. And I see what you're doing, similar to homeowners in wildfire and risk in general, is, hey, Mr. Insurance Carrier, I want you to know that I'm an upstanding citizen when it comes to, helping you and helping myself mitigate risk. So please, yes, here I am, transparent as possible, so I can get the bigger bang for my buck, the most value for what I'm doing. Are you seeing the thought process be similar to that, or are people still against, in your mind, with the anti-data sharing? What's your thought on that?
There's a lot to unpack there, but I'll start by saying that insurance companies are going to get data one way or another. The feature of FireBreak that our users, that the policyholders like, is the fact that we're not sharing the photos. And there's a list of about 50 things, 50 data points that we provide, but we don't provide information like, is there a trip hazard on the stairs? Because that's not in our remit. And so how do we make sure that the data that's being used is telling the whole story? And sometimes the aerial photographs, the satellite imagery, it just doesn't tell the whole story. And so it's the policyholder's opportunity to get back in the driver's seat.
I love it. So well put, Kate, because it's interesting. You're right. The carrier is going to get information one way or another. Why not best from you, where you control the information? Because we had a customer that just called us this last week and says, hey, this insurance company says that they saw images of my roof and they want me to replace it. And they're asking us, like, how are they getting images of my roof? No one's ever been here. Blah, blah, blah. Like, okay, well, they're using data, right? Like, they're getting it from somewhere. But what a great point for us as homeowners to control the data and to control what's being given to the insurance carrier, so they can see exactly what we are doing to mitigate our own risks. So I love that. Kate, let me ask you, where can people, if people say, Kate, love what you're doing, I want to be a part of this. I know that you're still in this beta test stage, but if people want to volunteer and say, Kate, sign me up, I want to be a part of this, where can they go? What can they do?
Absolutely, and thanks for making that point. We are early in the journey, and the product is built, but it's in beta testing. And we would love nothing more than for folks who are proactively reducing their risk, or really any interested party, to become one of our beta testers. If you're like to be ahead of the curve and an early adopter, go to firebreakrisk.com, firebreakrisk.com, and there's a place there where you can sign up. Or you can email me directly. My email is Kate, Kate, at firebreakrisk.com, and we'll get you set up. My colleague Daniel is leading the beta testing and the outreach and making sure that we walk you through all the steps and hold your hand and make sure that we get all the information we need in order to make the app a positive experience for the users, and to make sure that the underwriters are getting the data that is useful for them and that actually moves the needle on insurability, the yes-no decision, but also the price and the premium.
And look, I would say because I'll get on your list, if not today, by tomorrow, Kate. So I want to test this out.
Good.
Yeah, my pleasure. Because look, I want to be in control. I want to help. I want to help my cause. I want the carriers to know, OP is doing something about his risk, and I'm actually talking to my neighbors and my community about really doing something all together. And those things take time, but it really starts with us as individuals. And so I really like this concept. So for me, I think that being able to have the control to deliver the message of what I'm doing is going to be helpful in my cause. The carriers are in control. They've suffered enough, and now they're like, they want, hey, please change the rules for them. And I think politically in our states, we've got to hope for better resolutions on what's taking place at the state level. But Kate, thank you so much. And I do want to give you an opportunity before we leave. Is there any cry, any shout, any message that you want to give to people? Because look, I know where you've come from, and some of these people that I interview, I love when I see your history. I could tell there's a passion that you're navigating through, and I love it, because the people that win from your passion are the listeners, are the end users, are the people that you're serving. So I love aligning with people like you and your other co-founder that have created this vehicle to try and help people. But is there a resounding message that you'd like to leave the listeners with?
Yeah, OP, it's folks like you who get the message out there. And so I'm just going to shout right back at you and say, give a shout out right back at you and say, thank you for making all of the good work visible and amplifying. There's so many folks doing good work to help solve problems related to disasters and wildfires. And insurance is, it does fulfill a noble purpose in society. We all like to hate on insurance, but actually it provides, in its purest form, it can be a force for social good. And, there are those of us in the industry who are trying to bring it back to that true purpose of fulfilling the social good of stimulating disaster recovery.
Boom. So well said. I completely agree. It's a tool that we should not live without. For all of us there that sometimes we bang on the door or bang on the table that this isn't fair. The reality is insurance is an absolute critical component for our own well-being and our society in general. So we hope for better days, but in the meantime, minimizing our risk is going to be crucial. Taking back control as homeowners is going to be important, to be able to make sure that the carriers know that, yes, I've done my part and I want to be looked at uniquely for my particular home and what I've done. And Kate, with your software, I think we can get to closer to that kind of level of response from the carriers, and hopefully favorable results in being able to be insured. So, Kate, thank you so very much for joining us. I look forward to our continued conversations. And actually, I'd like to get you on maybe towards the end of the year also to see kind of what the results are on the progress of your company.
Thank you, OP. What a pleasure. Take care.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.